Hey everyone, this is Wilson. Welcome back. Happy morning on a good old Monday. And there was a couple trades that I spotted today, where there was a lot of gap movements, and I made a couple trades today on these specific stocks. And I want to just make this video to talk about how you should trade gaps. So for me, just like every other trader, especially for day traders and momentum traders, we like trading the first 30 minutes to 1 hour and a half of the trading day. Doesn't mean I don't trade later in the day. I always do, and I'm always looking at my charts to see what else I can get into, what else I need to take my profits on, because sometimes I do a lot of swing trades as well. But gaps is one of the questions I get asked a lot, and like, how do I play them? So NETE, very hot stock. On Friday, they had a really good play that pushed up to 7. I took my profits from there, and then I also made another video about why you shouldn't chase a stock, where I use NET as an example. You can go look that up in my channel. But today there's a lot of gap right here, as you can tell. And now it's about midday and it's trading lower, and that's always what happens with these type of momentum stocks. Now, before the day ends, if there's still a lot of volume, as you can tell, the bottom here is the volume, then that means there could be a continuation play the next day. Now, this company did have good news, but I don't think it was the best news that got picked up. So there wasn't that much awareness, or else it might be actually trading a lot higher than what it is. I actually think this company is a little bit undervalued for what it is, to be honest. But I'm trading the stock as a day trader, so I'm not looking at too much of the fundamentals. I just look at the catalyst, some sort of boost, and identifying these gaps. So I don't like to trade pre-market hours, so I don't like to buy the stock pre-market, and I don't like to trade the first minute the stock opens, the market opens. I like to wait and see the patterns, and this is what I'm looking for. I'm looking for gaps like these to fill. For this specific stock right here, NETE, what happened was that I didn't get on the rise of this first gap. So if we zoom in, we can get a clearer picture of how it is. Let's see. Perfect. So once the market opens, it starts to go up. Now, a lot of traders, what they do is that they take advantage of the first 30 minutes. So at around right here, 565, 566, they'll try to get in and they'll try to get out by before 590 so that they can actually take their quick profits. And that's the gap and go strategy. Basically, if you heard that term a lot, the gap and go strategy, that's what it is. They try to trade the first 30 minutes a day right when it opens, and they follow the gap for that quick profit right there. Depending on your position size, you can take in a couple hundred to a couple thousand, right? But I don't like to do that because I feel like it's a lot of gamble, and if the stock does get heavily shorted on the next couple candles, it will become a chase. And then if I'm still holding on to it, as you can see, what happens is that you become like a bag holder, and then things can get really bad if there's no continuation play. So two things you have to really look at when you're playing any type of gaps. You have to look at the volume, and you have to look at how the candles are playing. Those are two things I try to pay to focus the most at. And what I look for is this. I see this is going up. I don't chase it. I wait for the pullback. Now I want to see right here how strong the pullback is. And the way I identify how strong it is by the volume. This is why it's so important to look at the volume, because as you can see, there's two red candles. That means the price is dropping. But these are very clean red candles, meaning that people are just probably taking the profits from the first 30 minutes or when the market opens. So it's not that short sellers are coming in and massively shorting, or else it's going to go to a new support and it's going to drop really low. So I see that these two are relatively clean candles, red candles, and then what I want to look for is the green to push. Now, what I do is I monitor this green very closely, and I want to see a follow-up green. So I didn't get in right here on the second green candle, mainly because it hasn't broke the high of the massive green candle right here. So I like to look for that. And what happens is that, as you can tell, there's more people taking the profits, but it's still rather clean because the selling volume isn't too high. That means that the stock is still consolidating and it could be very strong. Now you see all these bars kicking in. You see all these high volume green bars. That's what I'm looking for. As soon as it broke the first long one right here, that's when I took my position. I didn't squeeze for too long, but it was roughly around 597 that I took in, and I rode it all the way up to around 617. So not even at its highs yet, but that's when I sold. Now I could have held it longer or did a partial sell right here and then sell the rest later when it gets to this high at 635. But this stock really jumps a lot by movement, and there was a little bit more selling volume here, so this could mean that shorts are kicking in. I don't know because during your trading you don't see all this, so you don't know if the there will be more red bars at a shorting volume, like more aggressive red bars. So I try to avoid that, but that's how I like to play the gap play. I just like to watch how it goes, and once it breaks the high, then I know it can potentially go for a breakout. And if it pushes higher, then that's good. And if it does push higher, then usually my strategy is to do a partial sell on my shares, and then if I and set a new stop loss. That way I can ensure that I take my profits as well as continuation on the profits. Um, it's all about looking at the volume and seeing how it goes. Now let's take a look at a more smoother one where there was a dip. So wait, this is more of a swing trading stock. Hold on. Here's a clearer picture. So this is more of a swing trading stock that people like to do as a leverage ETF. I like trading these a lot. I made a video on leverage ETF that you can check out too. But I look at this one closely along with other swing leverage ETF stocks like JNUG and DGAS, UGAS, and stuff like that. But what I look for is you see how it's dropping downwards on a downward trend, right? What we want to see for is that it can break above this starting point when it was starting to drop lower. So it can push a new high, push a new resistance. And that's exactly what I did. So later on during the day, not when it started, actually a couple hours later, once it broke past this and I saw the volume, remember the volume is important. I see all these buyer volumes kicking in. That's when I decided to get in because I knew that it was going to push for a new high. And then I was able to not take too much of a profit, but I was able to take around 11 cents profit from my entry point. And that's how I like to trade the dips for an intraday trade. I like to see that it's recovering from this downward intraday trend, and as it goes higher, I don't want to get in like right here. A lot of traders would, but that's just not my style. And again, what I do does not work for everyone, but that's been what I've been sticking with, and I've been consistently profiting on my trades. I like to see that it breaks above the starting point if possible and go for a new high. Now, if there was a more of a midday play, then I would probably buy at a low like right here, and then I can even push to around here. I don't need to wait for it to break the daily starting point. I can just get in later on. But this was still relatively, I guess, considered earlier today. So I like to see that it breaks the initial starting point before the downward trend before I get in. And I like to take my profits quickly because when you're day trading, you gotta remember you have to have your discipline. You have to know how to set your stop losses and you know how to get in. So this was another one that I looked at and that I thought it was a pretty crazy trade. Now the last one I want to go over is LBIX, another hot stock continuation play. The reason why I want to go over this one is because there was a big gap as you can see in the opening hours. And let me zoom in for you guys. So as you can tell, once the market opened, it dropped. But I looked at the volume and I saw there was intensive volume, which is super important first because it will move the price, and it was buying volume. So with this in mind, and as soon as it recovered with the first green candle and it went above the starting point, I got in. And then as soon as it hit up here at around 352, I got out. So I was able to take my quick 30-cent profit quickly right after it broke the first part. So that's another trading strategy aside from the gap and go, which is where you wait for a first pullback. And in this case, for me, the first pullback was this. I like to watch it and I like to see the volume. I see these consecutive green bars trading at really pushing high. I know that I can't hold on to this stock for too long, so I can't really swing this. If I were to swing it, I would get in at the lows later on after a couple hours have passed when the market opened, and then try to swing it for the next day for a continuation play. But that's only if there's intensive volume and still picking up. What I like to see is always a clean red volume that's lower than the green volumes and that it breaks the starting point, pushing towards a new high and upward trend. Then I like to take my profits quickly. So this is how I trade my gaps and how I like to do my dip plays. I showed you two examples that you can take either a slower approach or a quicker approach, but these are all intraday like momentum tradings. I hope this video helped and give you more analysis on how you can actually evaluate the stock and make sure you actually watch the patterns and most importantly watch the volume. If you enjoyed this video, hit the thumbs up, subscribe, and you can follow me on Twitter at any time at iswilson8. Thank you for watching.